Good morning. Today is Friday, August 26, 2022. We're going to be talking about Jackson Hole and Jay Powell's talk there. We're also going to be talking about a rumor about Amazon, but we're going to start off with a question from a usual listener. This person was asking about, had some follow-up comments after we spoke about the student loan forgiveness. Again, if you have any questions on anything that we're talking about on the call, feel free to write it in the chat. Tom's on the Zoom call, so he can see the chat as well. And we can answer those in real time. You can also email us, or we will talk about it on the show the next day. But we want to talk quickly about the student loan forgiveness because there was a question about, do we actually think this is going to go through? I think the base case is that it does go through. Right now, there could be some legal challenges. The biggest legal challenge will be, does the administration actually have the authority to do this? The administration is saying that based on the HEROES Act, they do have the legal ability to do this. The HEROES Act authorizes the secretary to address financial hardship and authorizes the Secretary of Education to, quote, waive or modify any statutory or regulatory provision applicable to the federal student loan program. And the conclusion of the legal advisors to the administration was that the targeted relief toward these people who had student loans is appropriate because they were affected by a national emergency and they would be in a worse position financially as a result of the national emergency. So that's the justification. I think that this could be challenged, but the question is who will actually challenge it? And I think the conclusion right now is that the most likely challenger would be the states. There are 13 states who are due to get some level of tax income as a result of the student loan forgiveness. They actually have to pay tax on that. That probably won't be the case. They'll probably allow the students not to have to pay the tax on the forgiveness. However, they could argue that you're essentially depriving the states of tax revenue as a result. So I think that might be the argument. Notably, in Georgia, you do not have to pay tax on student loan forgiveness. Tom, any thoughts on this?
I mean, I think it will go through. I think that definitely is the best case or the base case. I just don't think it sets a very good precedent that the president can unilaterally, spend between 300 and 980 million or $1 billion in taxpayer money without any sort of checks and balances. I mean, obviously the language is there in terms of the HEROES Act, but I just if we're going to do this, then what's next on the list, of just massive handouts and massive tax problems.
No, I agree with you. And I think it gets to the point of whenever an act or a law is passed, there's not just an implication then and there. This was passed back in 2003, but there could be a interpretation of that 19 years hence, which is done by a different administration for different reasons that you may not agree with. But the law is in the book. So I think it's just kind of a reminder for politicians to be aware of that.
I mean, it's sort of why do we have the checks and balances if we can just decide that we can suspend them at any situation we deem to be an emergency?
Yep.
So
I agree with that.
Bad times.
There is some street chatter today that Amazon was set to buy Electronic Arts. It was a weird story. It was reported by USA Today, which doesn't usually break news like this. So I was a little bit skeptical. CNBC is now reporting that Amazon is not interested in EA in buying Electronic Arts. Apparently, Apple, Disney, and Amazon have been listed as potential buyers, according to that USA Today article. But again, it was very bizarrely sourced. And I don't think this actually will go through. In fact, I don't even think that Amazon intends to buy Electronic Arts. I think it's kind of a clickbait, and some journalists need to meet a quota, wanted to hit some really good page views. And, they can just say, well, we have a source unidentified. And we actually saw this issue once a few years back in a holding that we had. And I remember it was a CNBC story that actually came out. We own this company called Maxim Integrated Products, which makes semiconductors. And there was this talk that this Japanese company was going to acquire them, Renesas. And it was sourced by sourced kind of oddly. The guy who wrote the article hadn't really broken deals before. Seemed unlikely that he would break a deal of that size. And so whenever you see these pieces of news, there's a lot of fake news out there, even from purportedly reliable sources. Having said that, Tom, any thoughts on this story, or the kind of the fake news deals, or even just would Electronic Arts be a good ad for Amazon?
I mean, I don't think it goes through. I think it would be interesting, probably more for somebody like Apple or Disney, particularly, Apple obviously trying to grow the ecosystem outside of the iPhone.
They have Apple Arcade already.
Yeah, they've been moving in that space slowly, and I would argue sort of unsuccessfully for the last few years. Disney obviously looking for IP. Amazon, I would say the only overlap would be that they've been trying hard to get access to the NFL. EA Sports makes Madden, which is arguably the hottest title every year, not called Call of Duty. So I think it's close enough that if you could pretend to have a source, or have a source that is just willing to say that they're going to do it, it's great for a news story to get some eyeballs. But I just don't think that there's anything concrete here.
I think there could be some synergies if Disney were to spin off ESPN, which some people are talking about, and then merging ESPN with EA and almost doing a merger of equals at that point.
Yeah,
that could be a really interesting deal. That would be extremely difficult to get through because you're doing two transactions at once. And first thing they teach you in private equity is never do two deals at once. SPACs never do two deals at once. It's hard enough to get one done. Having said that, that could be an interesting play. All right, let's talk Jackson Hole. Jay Powell's speaking at 10 a.m. He's going to talk about the outlook for the U.S. economy, inflation, and interest rates. Bank of America wants a hawkish Fed. They want Jay Powell to come out and say, we're going to do 75 basis points and we'll do 50 basis points, because Bank of America's view is that inflation is unlikely to fall unless the Fed really gets aggressive. And so they conclude the sooner the Fed plays the role of the courageous lion, it's better for macro and it's better for markets. And I think you'd agree with that, Tom.
I definitely would agree with Bank of America.
On the other hand, Goldman is saying that they actually expect Powell to reiterate the case for slowing the pace of tightening, but he's likely to balance that message by stressing that the FOMC remains committed to bringing inflation down. The Wall Street Journal says he's unlikely to deliver a strong argument for either 50 or 75 basis points. He's just going to say, I'm going to be guided by the data. What is your opinion? What do you think he's going to do, and what do you think he should do?
Man, it's so hard to tell. I mean, especially if you listen to all the talking heads, because we had Raphael Bostic saying it's going to be a coin flip. Then we had Esther George saying we need to go hard. Then we had Jim Bullard come on yesterday afternoon and say that we need to be at 4% by the end of the year, which would be functionally between 8 and 9 rate hikes between now and the end of the year, which would be, we're on this pace for the foreseeable future. So if those are three members. I mean, you look at Harker, we've got no idea on him. Lyle Brainerd, I would argue, is probably closer to 50 basis points. And then Jay Powell, he's almost impossible to read because he's not a splash guy. He keeps it pretty close to the vest there. So, it's going to be an interesting one. It's very hard to say what's going to happen. Futures are indicating that we're closer to 3 rate hikes than 2, but not by much. I mean, it's like 2.67%. So, basically a 2/3 probability that we're going to get 3 rate hikes. So today, I think the big thing is going to be listening to the stuff that's even outside the rate hikes. What are they going to be doing in terms of, the balance sheet? What are they going to be doing in terms of the mandate? Are they going to change any of the verbiage as to where they're looking to go with inflation? This has often been where there have been massive policy changes or massive moves on the monetary side, things like the original quantitative easing, Operation Twist, the change in the average inflation target was at Jackson Hole. So that's really what we're looking for, in my opinion, is anything that's going to give us this is the playbook, but the playbook might have changed just a little bit. Here's the trick play that we're rolling out this time in order to, facilitate monetary policy. So obviously we'll be watching in real time. Though I've read this morning that they're actually going to be broadcasting live from the actual boardroom that they've done their discussions, which has never been done. It's at the Grand Teton National Park. So it should be a pretty interesting room. It's sort of I don't know why someone would publish an article about that, but I did read it and that sounds pretty cool, I guess. So yeah, that goes live at 10. And I think that the market's going to be very neutral until then. I don't see a lot of there could be nobody's been making big moves ahead of this because you could get caught one way or the other. And so I think everyone's going to wait until after he speaks to make any major trades today.
For my part, I think that if I was in his position, based on how he's wired, I think that he's probably going to say nothing by saying a lot. And what I mean by that is he's going to do the classic two-handed economist, on this hand, on the other hand. So there'll be something for everybody. He won't commit to anything, and he'll just talk and talk and talk. And he'll basically be a reporter for what has happened, interpret what has happened, and say this could happen or this could happen. And this is what we currently expect to happen based on the dot plot that we already gave.
Yeah.
And I think that's probably what it'll be. And if that's the case, I actually think the market reaction will be fairly favorable, because ahead of this, as we've all seen, with the exception of yesterday, there has been some hawkishness being priced into the market. There's mortgage rates have risen over the last week and a half. Stocks have fallen over the last week and a half. Interest rates have risen over the last week and a half. So the hawkishness has been priced into the market. And I think that you see a little bit of that unwind, because a lot of people have been very nervous about this meeting. So they've added a lot of hedges, which puts pressure on the market. If Powell doesn't say anything, again, if he says nothing by saying a lot, then he's just going, then I think that you probably have an unwind of some of those hedges and the market goes up as a result in the end of the week. What are your thoughts on the market reaction? If, you said that before 10 a.m., probably not much trading happening. After the speech, if your base case is proven correct, what do you expect to happen?
I mean, if he says, we're definitely gunning for 75 basis points, we're going to keep the foot on the brake as long as possible, I don't think there's that much of a market reaction. Maybe some of the growthier stocks come down, but I think, like, to your point, we've had a massive sell-off, especially on the short end in bonds this week. I mean, equities have not done stellar. So to your point, I think a lot of it's baked in. So I think the expectations are already leaning that direction. But if he comes out and says, hey, we're targeting 3 or 4% inflation instead of 2 or slightly above 2 or whatever their mandate is exactly right now, I think that's going to end up being thought of as dovish, and we're going to see rates drop. We're going to see stocks take off. I mean, it's really, if there's any sort of, I guess, off ramp or backdoor positivity that he can sprinkle in there, I think we see upside. But I think that the risks, at least for today, are skewed to the upside. So if there's any sort of change, I think it goes green as opposed to red, unless there's some scenario that we're not really thinking of.
Yeah. And on interest rates, just for where at least I stand, and I'd be interested to hear Tom's thoughts on interest rates, I think that 325 would be a big buying opportunity. We've seen a sell-off already, a pretty significant sell-off, but if we hit 3.25, I think that you start to buy that fairly aggressively. That would be my view. Even if the Fed hikes, I think that you're probably pretty safe at 3.25. I don't think the 10-year would go much beyond that.
Yeah,
because I think that the expectation for recession would rise too.
Yeah, I mean, if that's the case too, then the 2-year is going to be at 370 probably,
right,
which is also a buying opportunity. I think. I mean, it's just everything is upside down and backwards right now.
All right. On that note, have a great weekend. If you have any questions on Jackson Hole, please let us know. We will have the market memo coming out at 3 p.m. for clients. So if you're a client, stay on the lookout for that. We will be recapping Jackson Hole in that memo as well. So I think Tom might be up for the authorship responsibility.
I've got a meeting this afternoon.
Have a great weekend.